Kayla's ready. Me is ready. Who is me? Shandell, also ready. Good, good, good. All right. Here we go. Let's get started. We gave them time to get in, right? We did it. We were fair. We gave everybody an extra 5 minutes to get in. So we're going to kick this thing off. Um, who am I and why am I teaching this class? So about 10 years ago, maybe a little more now. Yeah, definitely more. Probably more like 12 years ago. I tried to buy my first house. Now, when I tried to buy my first house, I had a lot of questions, but maybe you can relate to this. I wasn't really getting a lot of answers from people. Now, what made this worse, y'all, is I worked at the bank. I worked at the bank that I was trying to get my mortgage from or get pre-approved from. They were paying me about $15 an hour to get yelled at by people who overdrafted their accounts and right, all those things. If you've ever been to the bank, you know how it works. And so I reached out to the mortgage department at the bank, the lady there, and I'm like, hey, I would really like to buy a house. I think we can, did my application. And maybe you've been there before. And if you haven't, like, praise God, that's a blessing. I put my application in, and then this really, really weird thing happened. I heard nothing but crickets. Nothing but crickets. I waited a day, 2 days, 3 days. I waited a week. Someone finally messaged me back, and then they started asking me for all these things a week later. So that got me thinking, like, well, why do I need this? And why are they asking me for that? And what's really going on here? And so I would ask them questions, but they wouldn't answer it. So I said, fine, I'm going to call a different loan officer, maybe a loan officer at a bank that I don't work at. Maybe they'll answer my questions. Can anybody guess what happened? They didn't answer my questions. They did the same thing. So what did I do? I went online. Now, y'all, 12 years ago, YouTube wasn't as popular as it is now. We didn't have all these videos on YouTube the way they have them now. Right? I couldn't go online. There weren't people doing first-time home buyer classes online like this. And the ones that were doing it in person, they just didn't seem to be that helpful. So, but there were these websites that you could go on. One of them was called like myfico.com. And I would go read the forum posts, and they would have loan officers and mortgage brokers in those posts, and they would be explaining different things. And I spent hours doing that to try to piece together like exactly what I needed in order to be able to buy a home. And the reason I did that is because I was terrified of getting denied. I didn't want to be denied I didn't want to go through this whole process and spend money and then get denied for the home. And so, but something happened in me that day when those things started taking place. And what happened was I realized that people in this business weren't really that friendly, nor were they really answering people's questions. And so it took about 2 years after that, but that's when I first got into the mortgage business. And the primary reason I got into this business is because I thought to myself, if that's how they treat people, I was raised better than that. I can treat people differently, and that's what I've done. And I wanted to do whatever part I could to make sure that no one else felt the way that I felt when I was trying to do this thing, which is big and scary, and it's a big, it's a lot of money and all of those things. So that's why I do this. That's why I do this. Diane says they're not friendly now. You got that right. You got that right. How many of you, you can either wave at me, I can see most of you, wave at me or drop it in the chat. You've tried to talk to a loan officer and it's like they're not interested. You've tried to talk to a realtor and they're not interested. They don't seem very interested. Anybody? I know Diane says they're not friendly now. So, yep. Yep. So here's the thing, right? Yeah, all the hands are being raised. All the hands are being raised. Here's the thing, right? They want you, the way that most loan officers work is they want you to fill out an online application, give them money, give them your social security number before they ever even have a conversation with you. Now, how wild is that? In most parts of the world, we call that a scam. right? If someone called you on the phone and they said, hey, let me get your social security number, you would think that's a scam. Hopefully, you'd think that's a scam. So, the purpose of this class is to really give you the five mistakes that keep you from buying a house, right? There's five primary mistakes that people make. Now, look, we could do a class on 100 mistakes, right? I've been doing this for over a decade. I could tell you hundreds of mistakes, but really they boil down to five. And the point of this is to share those with you so that you kind of have that baseline knowledge of what's going on. But like I said when I opened up, in case you're just joining us, like I said when we opened up, the real value from the class is in the Q&A. It's in the question and answers, right? So the better questions you ask me, the more questions you ask me, the more you're going to feel like this class was awesome because y'all will pull stuff out of me that I'm not even thinking to talk about. So as we go through this, and you're thinking, oh, I would like to know that, chances are there's someone else in the group that does too. So drop it in the chat box. Raise your hand and we'll answer your question. Okay, we got a deal on that? We good to go? Let me know. I'm going to work on sharing my screen here. Oh, and then now y'all disappeared. So I got to figure that out. Show meeting. Here we go. All right, y'all let me know if you can see what I'm sharing on my screen. I want to make sure that everybody can see what I've got up here. Yep. Okay, we're good. We're good. Everybody's seeing it. It's big enough you can read it. So tonight is all about the five mistakes that are keeping you from buying a home in the next 60 days. That's what tonight's about. Let me get it on presentation here. So one thing that I want to put a bug in your ear before we get started. I lied. There's actually more than one bonus. So if you signed up, you know I texted you earlier and I gave you a link to what we call the Bayou Blueprint. You all should have got that. If you don't, drop it in the chat and let me know. That was the bonus that we promised you when you signed up. But I have a new bonus that we weren't planning to roll out until 2026, but we're going to go ahead and open it early, and you guys are actually the first people that are going to see this. We are creating a home buyer or a homeowner academy. And so you guys are going to get access to this. It's up to you. You can take it or leave it, but it will be a community where you can ask questions. Our team will be in there. We'll add other people like realtors and insurance agents and different things like that that we trust that aren't going to like try to sell you or do anything weird, to be in there to answer questions. And we have courses. We have, if you'll let me, so when you get in here, we're working on building out all these different courses about the different loan programs, first-time home buyer courses, all of that stuff. So you guys are going to get access to that tonight if you want it. What I'll do right now, I see Clark, you're saying you don't have the link for the Bayou Blueprint, so I'm going to drop that in the chat for you, and then we're about to take off. And then I'm going to put the link to the new community that we're launching, and so you'll have that as well. Now, if it is new, so if you experience any kind of bugs or anything, let me know. But I'm excited about it. All right, let's jump in. Enough of this. So tonight we're going to learn the five mistakes, the common traps that delay home ownership. Sherelle, if you look in the chat, I just posted. It's that long, weird-looking link. That's the link to the PDF bonus. We're gonna learn the path that actually works, and we're gonna talk about you getting a custom roadmap for your personal journey. Okay, so let's dive in. The five hidden home buyer mistakes. These small missteps can cost you months or even years of progress towards home ownership. So here's the first one, and by far, y'all, this was the most asked question. Okay, so we've got other things on here, so stay with me, but the biggest mistake is thinking that you can't start until your credit is better. Now, that doesn't mean that everybody qualifies, right? But the number one mistake that I see is people think they need perfect credit to buy a house, and that's simply not true. How many of you know that you can buy a house and you don't need like a 700 credit score? Anybody know that? Okay, here we go. Yep, yep. So here's the deal. Here's the deal. You actually don't need perfect credit, but there are also two, let's call it bad credit. I don't like the language, but it's language that everybody understands. There are different versions of bad credit. Okay. There is a person could have a low credit score. Let's call it a 580. Let's call it a 600. And the reason for that is maybe they have a medical collection, and they don't have a lot of credit. They just, that it is what it is. That is a very different scenario than a person who has a 580 credit score and they have a lot of debt and they don't repay any of it. So not all quote unquote bad credit is created the same. The reality is you don't need perfect credit to buy a home and you're more than your score. Now, the way that these programs work is when we're trying to qualify you for a mortgage, there are score cutoffs. So as Kayla said, 580 is a cutoff, right? If you want to do an FHA loan, which the only loan program that goes lower than FHA is VA, and you need to be a veteran. You can go down to 500 with that one if you're a veteran. But if you're not a veteran, FHA is the most flexible program, and they cap you at 580 if you have 3.5% down. But just because you have a 580 doesn't guarantee you'll get approved. It's really about what's going on in your, on your credit report. But you don't have to have a 720. You don't have to have a 740 to buy credit. We help people. So you could go to my reviews and you could see their review. We just helped a client. Her name was Megan, and they had 580, 600-ish credit score, and they had been renting for like 7 years because they didn't think that they could buy a house. But we were able to help them, and literally within 30 days, they reached out to us, and within 30 days, we helped them buy their first home. They were first-time home buyers. They got into a home, and they didn't have to start. They didn't have to rent anymore, right? They qualified for FHA. And so the great thing is that you don't have to have perfect credit in order to buy a home. There are minimums, right? There every program is different. I'll tell you, and then I'm gonna start because I know a lot of you have credit questions, but I'll tell you that the really important thing, there's two things you need to know if you have a lower credit score. One, if you have a low credit score, you're probably not going to be able to buy a house without having a down payment, right? And if you've ever purchased a car, we're not like the car business at all, but it's a similar concept. You usually have to have some kind of skin in the game. It's the same thing. So if you have a lower credit score, FHA says you need to have 3.5% down. What does that mean? What does it mean to have 3.5% down? That means you need to have 3.5% of the price of the home that you're buying. So because I'm not that smart, I'm going to make the math easy. If you were buying a $100,000 home, that means you would need $3,500 as a down payment in order to be able to purchase the home. If it was $200,000, we can do that math. It's just double, right? That's $7,000. So that's what the guidelines tell us have to happen. The other thing that's really important if you have a lower credit score is late payments. If you have recent late payments, let's call it more than two or potentially more than one, that could create a problem for you. Doesn't mean you can't buy a house ever, but those are kind of some of those obstacles that you might have to cross over. But I'm telling you, and this class really, it's for you if you're in that 620 and over range, you're going to likely have more than one option. Anybody that's under that, between that 580 and 620 range, you're probably looking at FHA, right? There's exceptions to every rule, which is what makes doing these classes harder because there's very little, always this, always this, always this. But as a general rule, that's what we're looking like. So I know that a lot of you had a lot of credit questions. Does anybody have a question right now? Did someone raise their hand before I move on to mistake number two? And you can drop it in the chat or you can raise your hand. Remember, I want the more interactive this is, the better the class will be. All right. Oh, here we go. Kayla says, what's the score for rural development? So the score for rural development is technically 580, and rural development is a zero down program, but you really the way that it works is you're considered a manual underwrite, so there's a few more hoops that you have to jump through. Um, Plus the cost of the rate, if you're like under 600, it's almost like the cost of a down payment. So that one's a case by case basis. Typically, you want to be at least over 600, even though they say you technically only need a 580. Miss Diane says she has okay credit, but I can't get approved. Miss Diane, I'd love to like if there's something you want to share about that. Like I know sometimes when people say no, there's a reason. I would be happy to walk you through that. And if you don't want to do it on the actual call with everyone else, we could do it later if you wanted to. We could have a call or whatever. Um, Cassandra says, how do student loans affect your credit? So it depends, right? With student loans. What happens with student loans is you have you're either in repayment or you're not. So you're either paying them back because you're no longer in school and that time has passed, or you're in deferment. When you're in deferment, even though your payment is zero, the lender still has to count the payment against you. And so it's half of 1% for most of the programs. So if you owed $10,000, what we would do is we would take that $10,000 and we would divide it by half of 1%, which I'm terrible at math like this on the fly, so let me get a calculator to make it make sense. Um, Come on, calculator. So let's just say and I know some people owe more, some people owe less. If you owe $10,000 times 0.5%, it's 50 bucks a month. And so what we do is we take that 50 bucks a month and we put it as a monthly payment into what's called your debt to income ratio. Now we're getting into some more advanced stuff, but that is on the Bayou Blueprint. So we would add that $50 payment per month. It's half of 1%. Um, they won't hurt you. Now if your student loan is in collections, right, for instance, you have a collection account on, let me do this. If your student loan is in collections, or you have they're because non-payment or whatever, you have to get them out of collections, right? So they have to come out of collections, and they'll work with you to do this, and then you can proceed, but you have to do that process first. Hopefully that answers the questions about student loans, Cassandra. If not, let me know. So Jasmine says, scores is 639, and my lender said I couldn't get rural because of my school loans, but I'm still in school. So if they're saying that, I would assume it's because of what I just talked about. It's making your debt to income too high. If you have the little PDF that I gave you, there's a little spot there for you to do the math that the lender is doing. The one thing about USDA that a lot of people don't realize is you actually do always get approved for less of a home with USDA than any of the other programs because their debt to income ratio requirements is lower than every other program. Now, if y'all don't understand what I mean by debt to income ratio, debt to income ratio is simply the amount of monthly debts you have divided into your gross monthly income that gives you a percentage. All of the other programs are around 50% of your debt to income ratio you can use toward a mortgage payment. The thing is, and you'll see this on your PDF that I gave you too, you have to subtract out any other debt payments that you have. So that's anything that's going to show up on your credit report, plus if you had child support or alimony or something like that being taken. And then whatever is left is the max that you can spend on your mortgage payment. So my guess would be if they're saying your student loans are keeping you from doing that, that's where my brain goes, but I don't know if that's facts or not, because loan officers are crazy out here in these streets, and we don't always know if they actually know what they're doing or not. So, and thankfully, I've made a pretty good living on them not knowing what they're doing. But yeah, Chandel says, what about conventional? So, yeah, so y'all have probably seen some of the news where conventional no longer has a 620 score requirement. So they don't technically have a minimum score, but conventional is the roughest on uh, past credit problems. So even though they're saying you don't need a 620 now, they'll make you pay off all your collections. They don't like late payments. Like it's way harder to get pre-approved or approved for a conventional loan with credit hiccups than any other program. Conventional typically makes sense for this type of client. If you're on the call, because I know some of you are on the call and you have, you've got good credit. I can see that based on how you filled out the form. If you have good credit and a good down payment, conventional is usually the way you're going to want to go. And when I say good credit, I mean 720 plus. If you're not over 720, conventional usually doesn't make sense. Why? It's harder to qualify for, plus the rate is way higher. So if you got 6.25 or 5.75 or whatever it is on FHA, it's going to be like 1% higher on conventional. So it's really hard to make the math to do a conventional loan unless you have a high credit score and unless you have, because the PMI would also be more. So unless you have a high credit score and you're putting a good amount down, conventional doesn't always make sense. Okay, Kayla says, how can a married couple get approved if only one spouse wants to use their credit and not the other's credit? Yeah, that's tough, right? So Louisiana is a community property state. I think you said you're here in Lake Charles with me. So Louisiana is a community property state, which means that when you sign the dotted line to the person you marry, their debts are your debts are their debts. So we have to count both. And the way that you can leave them off the application, but if you do that, you can't use their income, right? And that's usually where the hiccup comes, is we want to use their income but not use their credit because it's not as good as, the other person's. But you can't do that. It's all or nothing. So if they're on the application, then we can use their income. Either way, we have to count their debts if you're married. So that's kind of the sucky thing about being in a community property state, is that you do have to do that. Hopefully that answers your question, or maybe it just tells you more of what the problem is. But you can, to answer the question directly, you don't have to put your spouse on the mortgage. You just have to be able to afford it with your income only. So if there's another spouse that can't be on the loan because of credit reasons, you have to make enough income to support that note based on what the lenders, the debt to income calculations and things like that. If you don't do that, then that's when you're going to have qualification issues. All right. All right, let's jump into step 2. Let me reshare this screen here. Or sorry, mistake number 2. All right. So mistake number 2 is I don't have enough saved yet. Here's the deal. Here's the deal. You do not need typically $20,000 to buy a house. A lot of times you don't even need $10,000 to buy a house if you play your cards right. Now, I know that tonight we've got people from all over. I was catching, the typical like Baton Rouge, New Orleans. I know I see West Monroe, Miss Diane over in West Monroe, right? There are all sorts of programs that are available to be able to purchase a home, and none of them require you to have 20 grand. None of them, unless you're trying to buy like a $500,000-$600,000 house, which you probably can't do that. So the reality is, and we kind of already hit on it, there are zero down programs. There are low down payment programs. There is also something called down payment assistance. Now, what I love about Louisiana is that if anybody is on the class tonight and you're willing to live somewhere that's not in the city limits, USDA, there's so many areas here that are eligible for USDA versus if you were to drive on over across the Texas border or even the Arkansas border or whatever, those states, because they're more densely populated, they have less areas that are available to use this program. So, yes, maybe it was an accident. Okay. Yeah, make sure you're muted, guys. I'm gonna try to do that for y'all, but it may not let me. So, okay. So many first-time home buyers qualify with less than they think. So even FHA, we talked about that, it's 3.5% down. We literally, actually, her picture, her picture is in this presentation. I'm gonna just show you because I have it. Where's she at? Oh, yeah, the one we opened up with. We helped her buy a house with $1,000 out of pocket. I think it was actually less than $1,000 out of pocket, and that was like literally just last month. First time home buyer. How did she do it? She got a USDA loan. And so there are options out there for lower scores. I mean, lower down payment options. Again, remember what Channing said that when you have lower credit, you need down payment money. When you have okay credit to good credit, there are options for you to get around that. Now, the only exception to that are veterans. If you served in the military and you were active duty and you qualify for the VA loan, this is not a VA loan class, and you qualify for the VA loan, you could have bad credit, you still get zero down. You earn that program. So as long as you qualify for it, in terms of, served long enough and meet the program requirements, you can buy a house even if you don't have great credit with no down payment. Everyone else, we either got to figure out how to get the score a little bit higher or we need to save some down payment money. And the best way to think about that is which one can happen faster and which one will cost me less, right? And so that's how we look at that. And so you don't have to have a huge down payment. I don't think people still believe you need 20% down, but if you do, that's not a thing. All right. Let's go on to mistake number 3. It is let's find a house first. How many find a house first people do I have in here tonight? Right? You are scrolling through Zillow every night, right? You're passing out on your pillow with your phone next to your head, saving houses, right? Because you want to find the house first. I knew I'd get some of you with this one. Listen, it's fine. It's fine to look at them in Zillow, but you need to understand that unless you're paying cash, okay? Now, if I got any cash payers in here, I think you found the wrong class because this is a class about how to get some money to buy a house. For the rest of us who cannot pay cash for a house, the reality is we've got to get money from the bank to do it. And if we don't get money from the bank to do it, then we can't buy the house. So what happens to so many people, y'all, I mean, I could sit here and I could tell you story after story after story after story of people that they come to me, they found a house, they went under contract on the house, and they never tried to get pre-approved. They never tried to get approved. They never tried to see how much it would cost, right? The realtor said it would be fine. The builder said it would be fine. And you know who I have to be? I have to be the guy that breaks the bad news, right? And I hate being that guy because I want to be the good news guy. I want to be the guy that says, congratulations, you're approved. But so many times we have to be the bad news guys because we shopped for homes and we made offers on homes before we knew what we could qualify for. And so you guys are smart, right? At least most of you, because what are you doing? You're on a class learning about how to get financing for something that you really, really want, right? I know the deal. It's not just about the house, right? It's never about just the house, right? Because if it was just about the house, you could rent. That would be fine because renting is fine. It gives you it gives you a house, right? It gives you a place to live. But I know, and you know, that the reason why we go through these things and the reason why we deal with whatever the bank wants to put, ask us for and all that stuff is because owning a home is actually about more than just having a roof over our head, right? When you own a house, you have security, you have freedom, you have a place that's yours. And I don't care who you are, something psychologically happens to us when we have that security. Not to mention, y'all, not to mention, do the math, okay? When you buy a house, you're paying what you were paying in rent already, but it's almost like all that money just comes back to you, even though you're paying interest because the house typically appreciates and so even though you're paying interest, at least up until 2025, for all of time until 2025, You would never be in a position where your house lost money permanently. Now, I know we had the whole thing, we're pretty far removed from 2008, where there were bubbles and people lost money. And even in some markets, not in Louisiana, more like Austin and LA and stuff, that's happening now. But it has never stayed that way, right? It always tends to appreciate. And that's good or bad. It's great if you own a house. It's bad if you're trying to buy a house and the prices keep going up, which is, a whole nother issue. But buying a house is about more than just having a roof over your head. It's having something that's your own. And the numbers, if you're a numbers person, maybe you don't want the woo-woo stuff, you just want the numbers. Homeowners are literally like 70 times more wealthy than renters. Why? Because they're making a payment every month that's basically like a savings account. They're putting it in, and over a period of time, they're building wealth, even if it's only through their home. But what a lot of people don't tell you, and what a lot of people don't talk about, is that when you buy a home, it usually sets off a chain reaction of better financial management, meaning the very act of buying a house puts you on a path where you make smarter decisions with your money. Why? Because you have to, right? You have to. So thank you for allowing me to go down the soapbox trail. I'm a preacher, by the way, so I'm known to do that from time to time. If y'all could just keep me on track and just be like, all right, let's go, let's go. But that was free. So let's find a house first is a big mistake, and it's a costly mistake because I've literally had people come to me after they've paid $1,000, right? They ordered an appraisal, that's $500. They ordered a home inspection, that could be up to $500. So they've got all this money that they've spent, and now I got to tell them you didn't even qualify for it in the first place. So drop a three in the chat if you don't want that to be you. Just let me see some threes in the chat. Hey, I don't want to make that mistake. Who do I have in here? I know some of y'all are hard-headed. Y'all not gonna y'all are okay with doing that, but I'm hard-headed too. I was the kid, right? Maybe some of y'all can relate. I was the kid. I didn't just touch the hot stove one time. I had to touch it two times to make sure it stayed hot, right? That's who I was. But yeah, let's not make that mistake. And we don't have to because you're getting the information that you need. Okay, now mistake number four, we're transitioning. Mistake number four is I'm gonna sum it up this way. Believing there's a perfect time to buy a house, right? I want to wait till the perfect time to buy a house. Well, I hate to tell you this, but that does not exist. Now, that is not, don't hear what I'm not saying. That is not me saying that it's a good time to buy a house for everyone, because that's not true either. The reality is that some folks, it's not the right time for you to buy a house. And that would be, I stopped sharing. Thank you for that. Thank you for that heads up. I appreciate that. I was flowing. Okay. Yeah, the reality is some of you, it's not the right time to buy a house. And here's what I'll tell you. This is what the loan officer down the street who tells you that it's always a good time to buy a house won't tell you. If you are struggling to manage your finances well, you probably shouldn't buy a house yet. You should probably figure that part out first because there are expenses involved with buying a house. And if you rent, just think about it. When the toilet got clogged, did you call the landlord? Right? When the air conditioner went out, did you call the landlord? Well, when you buy a house, guess who's the landlord? You, right? So you got to fix that. And yeah, there's home warranties and there's things like that, but if it's difficult for you right now, I would hate because I've had to have these conversations. I would hate to have the hot conversation with you like, Channing, thank you so much for helping me get in the home, but I can't afford it anymore, right? And I've maybe had that conversation twice in over a decade, but that's not to say there's not more people that, they just didn't call me, but um it's not always the right time for you to buy a home, but there is no right time to buy a home, right? It's kind of like a tree. You ever heard this statement? Like the best time to plant a tree was 30 years ago. The next best time to plant a tree is today. The sooner you can start building equity, the better. And so the way that we try to determine, is it the right time for me to buy a house? The math is simple. Can you afford it and does it make sense? That's it. Can you afford it and does it make sense? So let's
Hmm.
say that if you're paying $1,200 or $1,500 a month in rent, and your mortgage payment, the best case scenario for a mortgage payment, and I'm not saying this is everyone, I'm just giving an example, is that is $2,100 a month and you can't afford that $600 a month increase, well, then the answer is obvious. Now is not the right time to buy a house. However, take that same scenario, right? $1,500 a month in rent. You can buy a house for 15, maybe $1,600 a month. That's going to put you in a house somewhere in the $200,000 range. If you're in South Louisiana, North Louisiana, y'all's payments are a little cheaper. We're a little jealous of y'all. That's, hey, by the way, North Louisiana, that's the only thing we're jealous of y'all for. We're not jealous of y'all's gumbo or none of y'all's cooking, right? But they're gonna get mad at me. But that insurance y'all got up there because y'all don't have to deal with the storms we deal with, we are a little jealous of that. But if the payment isn't going to increase much, or if it's going to increase, but it's in a range that you can afford, then it's a good time for you to buy a home. Why? Because you're already spending that money every month to someone called your landlord, or maybe it's your grandma or your mama or whoever, right? And guess what they're doing? Every time you make that payment, they're building equity in that property. So you're paying their bills and making them rich. Why not do it for yourself?
Hmm.
Why not do it for yourself? All the good stuff in life, you got to take risks for it, right? It's scary at first. And you put your foot over the edge and you're like, "Oh Lord, I don't know if I could do this." And then you jump over and you realize everything's fine, right? We figure it out. Um,
Hmm.
but yeah, so don't try to wait for the perfect time. Just be resolute in this. Like, does the math make sense? Can I afford it or is it going to put me in a bad situation? And that's really it, y'all. That's really it when it comes to that. Does anybody have any? We're gonna go. We don't have much longer at all. We have one last mistake, and then we have a full Q&A time. Does anybody have any questions about these last couple of slides that I just covered? Any questions about some of these mistakes? Anything that I said that you want clarity on? And if you don't want to type, just unmute yourself and we can talk. Do 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 do. All right, I'm gonna move on to the next one. I hope y'all have some questions for me for the Q&A though. All right, here we go. Yes, there's going to be a recording, Miss Jasmine, for sure. Okay, so
I got a question.
the last mistake, and that's why you're here tonight, is trying to figure it out all by yourself, right? You can't know what you don't know. You can't know what you don't know. Home buying's complex. Guys, if they put me in charge of mortgages tomorrow, I like clarity, so I would just have like one rule. If you have this credit score and you have this much down, right? And you have this kind of job and you're gonna like the payment, you can afford the payment, then you get to have a loan, right? That would be way simpler than what we have now. But the reality is every person's scenario is different, okay? Your scenario is different than all the other 20 people that are on this call. And so, because the guidelines are so dense and thick, right? How many of you know you got your own job to do, right? You got to go to work, you're raising kids, you're doing everything. You got your own job to do. You shouldn't have to do what I did, which was go read the guidelines for yourself just to try to figure out if you can make this thing work, right? And I've been doing this for 10 years. And I still find things I'm like, I didn't know that. I didn't know I could do that. So, trying to figure out on your own will get you stuck and it'll have you thinking about buying a home for 2 years instead of actually buying one. And the whole time, the price of the house goes up, the interest rates go up. Hopefully, they come down. You pay more money than necessary. You keep paying rent, all the things. So the smartest buyers get some help. Now, like I said when we opened up, I'm empathetic to the fact of why most people don't reach out. Because when you do reach out, you hear nothing. You get talked down to. You get, give me your credit score and pull an application and then I'll talk to you. And so I get why most people don't reach out. And so um, we're kind of here to change that. Now, again, remember, I didn't promise y'all that everyone could buy right now, but it's never no. The answer is never no. It's simply sometimes not right now. But there is a percentage of y'all on here that the answer is probably yes. The answer is actually probably that you can buy, or maybe with just one or two things you'll be in the right situation, and then you'll be able to do it. And so there's a few of you I know that are probably tired of trying to do this on your own. Which, if you want to do it on your own, that's fine. You have the blueprint, right? I put it in the chat. I sent it to y'all earlier. You can literally walk through this thing, right? And do the math that it tells you to do. And you're going to get a really, really good understanding of what your options are. Now, the thing that you don't know and that I can't put in a 10-page document is every guideline for every loan program that exists. It's just not possible. And you ain't got time for that anyways,
The
right?
interest.
So what I'm offering tonight, and I know it's not for everyone, but what I'm offering tonight is to just walk through that with y'all, right? So to take this document that I've already given you for free and walk it with you. What's your credit score? Let's figure out that, right? There's all kind of ways we can at least get a general idea of, hey, what's your credit score? How much do you make? What are your monthly debts? And you can lean on what I know, or she's not on the call tonight, Tori on my team, what Tori knows to go, okay, based on what you know about you and based on what I know about mortgages, here's where we are. So you get
Hmm.
to lean on our expertise.
Right.
So if that's something that you want to do, and there's no pressure here, you can do that by booking a call with us. And it's not, sorry, yeah, it's not, it's not a pressure thing. I don't know what your experience has been like with other people, but it's a 10 to 15-minute call. And on that call, we literally walk you through the document I already gave you. But what we do is we tie that information back to what we know about doing mortgages. And if it sounds like you're ready and there's an option, then we'll give you the next step, right? We'll give you the pre-approval step. We'll give you like what we think you should do.
Hmm.
And if not, if it sounds like, hey, there's some red flags you're telling me about, here's those red flags, here's what I would do, then we'll give you that. And then we'll stay in touch with you. Hopefully you join the community, and then that's a great way to stay in touch. But we're able to do that. So for anyone that is interested in having a call with us, go to talkwithbayou.com. It's on the screen. It's on the screen. I'm going to drop it as soon as in the chat. There's only 19 of y'all on here. I think our first slots start on Monday. I'm sure Monday will book up fast. So for those of you that are excited and you want to get a head start on it, just click that. It's free. All right, it's free. Listen, I'm not going to ask you for your credit card. I'm not going to ask you for your social security number. I'm not going to ask you for any of that. It's a 10 to 15-minute conversation to figure out what we can do to put you on the right path. Now, hopefully, some of you are ready and 2026 will be the year you get to say, I bought a house. I don't rent anymore, right? And for the rest that maybe there's work to do, we will do our best to give you everything we know to do to get you in that right direction. And so, talkwithbayou.com is how you book the call. Does anybody? It's in the chat if you need it. I'm not going to belabor that anymore. But I do just want to remind you of everything. I probably already did more for you than any other lender. I've given you access to our academy, right? You can go to, I'll put that in the chat one more time too. I'm breaking rules. You're not supposed to tell people to go to more than one place, but I'm giving you two options here. For those of you that don't want to do the call, that's fine. Join the academy, right? You'll be able to ask questions. We're going to do all of our trainings in there in 2026. So not just this class. When you go in there, we're going to have 40-minute, 50-minute, hour-long teachings on FHA loans, USDA loans, VA loans, right? First time home buyer. It'll be great. And you'll be in a community with other home buyers who are asking questions that maybe you have too. So I hope you guys will jump in on that. You already been given the blueprint. You can sit here and do it yourself, or you can save yourself 2 years, a year, and just book the call with us. Let us go through 15 minutes and put that plan together for you. So that's what we've offered. Now I want to get to the good stuff, which is the Q&A. So I really hope you guys have good questions for me because this is my favorite part. I get through the PowerPoint just so I can go through the questions. So what's burning on your heart? Let me know. And I think we have a couple of questions that were asked earlier. So that'll give y'all time to type in your question or raise your hand for your question. And sorry, I'm playing around the camera here. Let me go back. What if a lot land and the monthly was $86 and they want you to go through the credit union? Is that you, Miss Diane? You're unmuted. What you mean? What you talking about?
Um, can you hear me?
Yes, ma'am, I
Oh,
can.
okay, so I had found a lot and it was on Zillow. And they was asking, well, the estimate was $86 a month. It was for one lot, but then at the end of it, she had it for two lots for 35,000. So she was
Mm-hmm.
telling me to go through Centric Credit Union, I guess, to
Mm-hmm.
apply for the loan.
For a lot loan.
Yes.
And what would you
So
do with that lot?
I would actually after I get through paying for the lot, I would use the lot and to put a trailer on it.
Okay. Would you buy a new trailer or a used trailer?
I was thinking about a used trailer.
A used one. Okay. So
Yes.
yeah, in that case, so it's a little different than what we talked about tonight too, because
Mhm.
it's a different type of program. In that case, when you're talking about buying a mobile home, putting it on a lot, and especially a used mobile home, that is going to be more of a bank program. Um, the other thing is they're going to ask for you to put more down. So
Okay.
typically my experience, because so I came up in a bank, right? So my experience with the banks when it comes to mobile home loans is they're going to want 10 to 15% down.
Okay.
Now, some of these banks, they have great programs. Where'd you say you were, West Monroe?
Yes.
I was trying to think. I don't know of any bank in West Monroe, but some of them have great deals on the lot loan. Like you can get a lot loan with a zero down. But when it goes to like trying to, unless you're going to pay cash for the mobile home, when it goes to trying to put that mobile home on the land, that's when they're going to ask for those higher down payments and things like that. So you would really have to work the numbers out to see, obviously that is probably a low cost option for sure, but if the trailer's 15,000 or 30,000, I don't know what used trailers goes for these days, but if it's 30,000, then that's what is that, $3,000 you'd have to put down or whatever. So
Yeah. Yeah. Okay. I appreciate
yes,
that.
ma'am. You're welcome. Let's see. Hey, Kayla, if you're still on, I did see your call earlier, but I was preparing for this, so I couldn't take it. So, but I will definitely be happy to chat with you. I'm trying to figure out. All right, let's see what else we got. Should you try to apply for a home first and see what you have to work on to qualify? And will they tell you exactly what to do to qualify? Oh, there we go. I did answer the question, hopefully. I think is it Mikira or Mikira? Mikira, probably. Um, yeah, we'll give you all that. So, and happy to do it. Kayla wants to know how long will the credit pool until the credit pool expire, or when does it count as one? So here's the deal with pulling your credit for a pre-approval. This is good for everybody to know. When a mortgage lender pulls your credit, it's typically they give you at least 30 days to shop that pool, meaning you can have more than one lender pull your credit within 30 days and it counts as one pool. When a lender pulls your credit, that credit report is good for typically 120 days, but it has to carry through closing. So that's why people will tell you 90 days because they're giving themselves 30 days to get the loan through closing. All that means is that if it expires, they have to pull it again. I don't know what other lenders do in that situation, but the way that we handle that is once we've pulled your credit one time in a pre-approval scenario, if for some reason you go out of the market for a few months, we don't pull your credit again immediately after. We don't pull your credit again immediately after. We wait until you actually find a house to go under contract on, then we pull your credit, assuming you're telling us nothing changed, right? Because things can change, and then that might be a different story. But, um, anyways, that's how we handle the credit report pool, Kayla. Hopefully that answers it. For the pre-approval, what type of agency do you recommend we go to? Me, if I could be selfish for a minute. So we do all of that. The company that I own, we are a mortgage broker. So not only do we do the pre-approvals and we help you and where we walk with you from start to finish, we work with multiple lenders and you don't pay us, they pay us. So when we work with multiple lenders like that, we're not stuck with like just one bank's program or one bank's rules, right? Because some banks, what they do is they have this thing called overlays. And so let's say that the rule is with FHA, if you have a 580 credit score, you're at least eligible to consider getting approved. And if you have under, you're not. A lot of banks will say, no, we cut off at 620, right? And so they won't even consider it. When you're a broker, we have access to every bank. And so we know the banks that have those rules and the ones that don't, and we have outlets for that. So your name came up as me, so I don't know who to address you as, but we would love to help you if you wanted that help. Okay, what about a new one? What about a new one? Let's see.
Okay, that was the conversation about when she mentioned the mobile home, and you said that the down payment would be larger if she was to do a used
A
mobile
new one.
home. So
Yeah,
what would it be if it was a brand new mobile home?
great question. With a brand new one, you're going to typically you work through. Here's been my experience. If you want to buy a brand new mobile home and put it on a lot, the dealers make it so hard for outside lenders to work with you. It is usually better to work with their lenders. Now, here's the downside. Their lenders have higher interest rates. I'm talking like 10%. So that part of it sucks, but all you have to do is get qualified through them and they'll do 3.5% down FHA. They'll do 0% down USDA. So it's not like the bank. Um, all you have to do is get the loan with them, get the mobile home put on the land, get it all together, get it all done, right? Because sometimes they've got to put, water and power and all the different things that you need to actually live on the land. And then you can refinance it with somebody like me, and we don't have to deal with the dealer who's going to drag their feet and not give me the paperwork that I need because they want you to use their lender. And I wish that it didn't work that way, but I've tried 5 times, and that's how it's gone down every single time.
So how long do you think it would take for a person to refinance something like that?
I mean, if you wanted to be a butthead about it, you could do it literally as soon as it was all done. If you wanted to be nice to them, you could wait 6 months.
Okay.
And why do I say that? In the loan world, right, there is no such thing as a prepayment penalty anymore. But in the loan world, if someone refinances a mortgage before 6 months, the company has to pay back everything they made on that loan, and then some. I've only had to do it once. It's not fun, but that's why I said, if you didn't care, you could do it ASAP. If you cared about them, you could wait 6 months. Okay, what do you think? Oh, barn dough market, man. I haven't done a ton of those. I think these days they cost just as much as stick built, maybe more because they're so popular. Um, the only issue we've ever had with doing a barn dominium is if it's in an area where there's not a lot of other barn dominiums. Um, hopefully my camera didn't just cut off. No, I'm good. Okay. So yeah, if there's comparables, then you're good. They're really not any different than any other house. Buying a house, do you think buying a house is easier and better than buying a mobile home? The answer to that is it depends. What I will tell you is it's always easier to buy a house or a mobile home that's already on the land versus trying to buy land then buy a mobile home. That's one of the hardest ways to do it. I understand why someone would want to do it because you could potentially find a deal that way versus paying full price. But in terms of like qualifications, if you buy a mobile home, even a used one that's already on land, then it is 10 times easier because you can work with lenders that are 10 times better. Um, USDA even you can buy a mobile home with. It just has to be a 2006 or newer. So there's options there. Will the credit pool be a soft or hard pool? So we wouldn't do a credit pool just because you did the call. The soft pulls are basically worthless in terms of getting pre-approved. They give us the information just like a hard pull would, but we can't run them through the automated underwriting system, which is what tells us if you qualify for the loan or not. So we don't do a lot of soft pulls, but we also don't just pull people's credit without talking to them. And so kind of the goal of the whole conversation that we would have with you is to figure out if based on what you're telling us, you even have an option to do this because we don't want to pull your credit if you don't qualify. That doesn't help anyone. And so that's kind of how we choose to do that, at least for our business model. For those of you that don't know, um, credit reports 3 years ago costed lenders about $32. They are almost $200 now. So you can imagine, like, I'm a small business, right? So we try to minimize that cost as best as we can. But again, there are so many ways, especially when you've been doing this as long as I've been doing this. I rarely ever get surprised whenever I'm having a conversation with someone and walking you through all this stuff, and then we pull the credit and it's different. So, and yes, Isabella, she asked, once the credit is pulled, do you take the highest credit score or middle? It's the middle score of the lowest borrower. So if there's two applicants and we pull all three bureaus from both applicants, the middle score of the one who has the lowest score is the one that's used for qualifying. I know that's wild. I don't make the rules. That's just what they do. Um, Joanna says, is there an income and household limit for USDA and rural development? There is. It's very high though. It recently changed. It's nearly 150,000 if I'm not mistaken, but let me look up real quick to give you a specific answer. 70 years old and retired while I'm looking this up. Can I buy a house? Absolutely. And you can take out a 30-year mortgage. They don't care that your age. We're not allowed to discriminate based on age. So you could be 99 and apply for a 30-year mortgage, and there's nothing they can do about it. So, and yes, you can also get a first-time home buyer if you're a first-time home buyer or if you haven't owned a home in the last 3 years. That also, but I'll also tell you, and I promise I'm looking this up. I'll also tell you that FHA and USDA don't require you to be first-time home buyers. So you don't even need to be a first-time home buyer to use those programs. All right, to answer the USDA question, Louisiana, it's the same across the board. If you have four people or less in your house, and they do count the income of every person in the house, it's 119,850. So 100 and almost 120,000. If you have five or more people, and they validate this with your tax return, by the way, if you have five or more people, it's 158,250. So as long as you're under that in terms of income, you would qualify. Chandel says, can we go through your company to buy land? No, I don't do land loans. I don't do construction loans, and I don't do renovation loans. The only one that I don't have access to is land loans. So we can't, even if we wanted to, we couldn't do them. That's going to be a local bank product, 9 times out of 10. Okay, guys, I'm at the end of the asked questions. Does anybody else want to drop in and ask some more questions? Maybe your question didn't get answered as we went through this. I will hang out as long as the questions are being asked. So probably at least, I'm willing to stay at least another 10 or 15 minutes. Let's do it. Let's do it. I'm going to drop that link just in case y'all lost it. Jasmine, is that pre-approval with us or another lender? Are you still on? I'm guessing you're still on. You just asked the question.
Yes, it's not with y'all, it's with another lender.
Okay. Do you know like what kind of score increase you're talking about in terms of like the amount of points?
Um, I have to do the math. Oh,
So the buckets are usually in 20-point increments, unless
okay, it
it's
was
like
like
you
a
go from.
15. It was like a 15.
So the way it works is the pricing go like if you were a 619 and you went to a 620, then yeah, because you're going to get a better rate. The next one would be like 640. The next one would be like 680. Does that make sense?
Okay. So I was pre-approved at a 624, but when I rechecked my score today, it was a 639. So I was just
Yeah.
trying to see if it was worth going through the process again to maybe get a better um amount than what I was
Yeah,
pre-approved
it
for
definitely
right
it
now.
definitely could be, and it would also be worth it to figure out like how do we get you that 1 point, right?
Yeah. Yeah.
Because then once you hit 640, other options start opening up to you.
Okay.
Did you by chance book a call?
I haven't yet, but I plan to.
I would just love to chat with you about it because we may be able to figure out, I don't want you to put all your business out, on the live here.
Right, right, right.
Um, but we may be able to figure out like what you've done and what else could be done. Because if you just get that one extra point, man, like it gets a lot easier and the rates do get better.
Okay, perfect. Thank you.
You're welcome. All right, let's see. Thank you, Clark, for the encouragement. Miss Isabella says, "What makes your company better than a bank?" Example, Hancock Whitney, if that makes sense. Hey, that's a really fair question. So, one, go look at our reviews versus theirs. Um, but the reality is, mortgages is all we do. I'm not trying to open your bank account. I'm not trying to sell you a car loan. I just do mortgages, and we do them very well. When and like, I feel bad because I'm talking like bad about my competitors, but the reality is banks are harder to qualify with, they're slower, and they communicate terrible, right? Because the loan officers that work for banks are paid a salary. They're not paid to get your loan closed. So anyways, I think you can have great service for them. And I'll tell you, 'cause since I said something bad, let me tell you something good. Banks are amazing and would blow us out of the water if you have a lot of money and you're buying a really big house. So if you're someone that's getting like a doctor loan or a jumbo loan or some type of that because you're like you're buying over $1 million house, which maybe it's like 1.2 is a jumbo now, they're gonna blow us out of the water all day, Isabella. But if it's not that, we will be if you're not a high credit, high down payment, high income borrower, we won't even be in the same room. We'll be so much better. But if it's the opposite and you are really good and well qualified and all that stuff, we can still compete. But that's really where they would shine. That's going to be the biggest differences. We also don't work 9 to 5, so like if something bad's going on in your loan officer leaves at 4:30 on Friday, and they're not answering their phone until Monday at 10. We're gonna see your text messages, and we're gonna be like, hey, let's talk about this or let's help you. So I think it's just a different level of service. And of course, nothing that I say is true all the time, right? There's going to be a bank out there somewhere and someone's going to be like, they were amazing. That's just been my experience in over a decade doing this. So hopefully I'm being fair. Hopefully you feel like I'm being fair because I'm trying to be fair. But it was a really good question and I appreciate you asking it. Um, it's not harder because of age at all, Shandell. Um, Age has honestly nothing to do with it. The only thing that would make it harder is if you didn't have any income, right? Or if you had lower income. Obviously, that can make it harder, just because the whole point of like the approval of a loan, it requires income to get qualified for it. But in terms like the age itself has nothing to do with it. Um, Clark's asking about Credit Karma. So Credit Karma is a baseline. But until lenders start actually using the Vantage Score 4, it's the scores are very, very different. And I'll tell you, the mortgage scores that we use are FICO 4, 5, and 6. You only can access them one of two ways, either with me or another mortgage person, or through a website I referenced earlier called myfico, myfico.com. You have to pay them $40 a month, and then you can get access to all three of your mortgage scores. I personally still to this day use that app to keep track of my credit and all those different things. Because they're the company that puts the score out, none of the other scores that you get, Credit Karma, the one Capital One provides you, none of your credit cards, even though some of those are FICO scores, they're not mortgage FICO scores. Mortgage FICO scores are some of the oldest scoring models around. So that's why they tend to weigh heavier on collection accounts and things like that. Okay, $100,000 income. I assume we're talking about the USDA thing, Joanna. $100,000 income, no dependence on your tax returns, but college students working and they're in the house. Uh, yeah, if they're living with you, then yeah, you would have to claim their income. There may be a cutoff for that in terms of like, how much they made. So you'd have to figure out like what are they actually making? But yeah, so if they're it is a household income limit. So if they're going to continue to live with you, then their income would count. Kayla, I think I just answered that question when I answered the other question about which score we use. We use the mortgage FICO score, and I know you asked it after probably. We use the mortgage FICO score, middle score. So that's Equifax, TransUnion, Experian, the mortgage versions of those scores. Absolutely. 740 credit score, you would be an automated approval almost certainly on USDA. So there would be a lot of there'd be a lot of flexibility there. It'd be an amazing rate that you would get too. So you could definitely qualify, Joanna. I would love to talk. I don't know if you booked a call or not. I would love to chat with you. It sounds like you kind of have a unique situation with your kids still in the home and working and everything. So let's talk about it and let's figure it out. We can do math on paper and try to piece it together and see what's going on. Miss Diane, I don't know what kickoff is. I'm going to take a stab at it. I'm assuming it's one of like these things that promises to increase your score by adding your rent or your utility bills or something like that. Correct me if I'm wrong. Um, they help a little. They can boost your score a few points. They're usually not dramatic though. Okay, tips to build credit. Yes, yes. In fact, if you join the community, because I get this so much, I'm putting together an entire like, here's how you fix your credit course. Now, I'm not a credit repair guy. Sometimes you need that. Most of the time you don't. Here's the three things that you have to do immediately before you worry about any of the other things. If there's anything past due, meaning it's still open, not closed, not in collections, not charged off, we don't worry about those. If it's still open and it's past due, you get it caught up, right? Because every month that it's late, it's dinging you. Ding, 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 10 points, 15 points, 20 points. It's really, really hurting you until you get to 90. Once you get to 120, they're going to close the account anyways. Um, that's step number one. Step number two, do you have credit card or revolving debt? Are they maxed out? Are they over 50%? Step two is pay those things down, get them under that. I have literally, guys, I have seen credit scores jump 100 points from paying down credit cards. So that's step two is, and especially if you have small cards, right? Like the smaller limit ones. And I know the bigger limit ones, it makes it harder to pay them down. But the smaller ones, that's an easier thing to do. Get all of your cards paid off except one and carry like a $5 balance on it. That's step two. And then step three is dispute any errors, right? Dispute any errors, figure out if there's anything wrong on there. That's kind of the three steps. That third step is the primary area where credit repair companies promise to help you. And they don't say it that way, but all they're doing is disputing information and hoping that accounts fall off. That whole business model is whacked. I have a guy that we work with that is less he's not scamming, let me just put it that way. But I still think the business model itself promises things that it can't really deliver on. But sometimes you do need their expertise because there's these wonky things and people really are doing you wrong. These companies are doing you wrong, and they'll help you get it right. Um, the collections on that, the collections we typically ignore. So here's the way that it works if you have collections. If they're medical, we ignore them. We don't even care. If they're non-medical, if they're, then we have to say, is the total of your collections more or less than $2,000? If it's less, we ignore those two. If it's more, and that's all of them together, not just one, all of them together. If the total of all of them together is more than $2,000, then what we have to do is we take the balance and we take 5% of that balance. So if it was 2,000 or if it was 3,000 and it was 10%, that would be 300. So we divide that in half, that's 150. So we would have to take in that scenario, I think I'm doing my math right. We would have to take $150, add that to your monthly minimum, to your monthly debt to income payments. As long as you still qualified, you're good. The second option is you can set up payment arrangements or a payment agreement, and then they would use that payment. But I haven't found that to be any less. Um, the deal with collections, why we never advise people to pay them off, at least unless a loan officer who has like done a real conversation with you, like 15, 20-minute walking you through your credit. Um, we don't tell people to pay them off because it doesn't help unless they delete it, which is very, typically pretty hard to get them to do. And sometimes it can actually make it worse because when you make that payment, they change the date of last action. It makes it look more recent, and I've actually seen people's scores goes down. So we try to avoid it if we can. We can't always avoid it, but that's kind of the way that collections work. So the deal with credit repair deleting all collections is they can't guarantee you that that will happen, even though they do. And the thing that they don't tell you, and you want to know how I know this? Because this happened to me. All right, I filed bankruptcy. This has happened to me in my life. I paid a credit repair company to delete all the collections so that I could get a mortgage back in the day. And they fell off for 6 months, but as soon as I applied for the mortgage, they monitored my credit report because they can do that through soft pulls. They put the collections back on. So that's my issue with them. It's not that they're all bad. A lot of them are, but it's just that they overpromise and under-deliver, in my opinion. Miss Joanna says, would using the kid's income hurt her when she leaves the nest and she's ready to purchase a home? Yeah, it could, right? Because now that mortgage payment she owns it too, and not half of it, all of it. And so if she tried to buy a house, she would have to be able to qualify with that payment unless you refinanced. But I think we might be able to figure out a creative way with that. So that's why I said just let's talk about it privately and we'll see what could potentially be done. Yeah, Miss Diane, I would love to talk with you. Just, I'm sure you already did. I haven't looked, but definitely book that call. All right, guys. I don't see any more questions. This is last call. If you have a question and you didn't ask it, most of you stayed on even till now. So that tells me that you're learning. If you have a question and it didn't get asked, ask it now. Join the community. You can ask it in there too. But yeah, any last questions? Oh, thank you. Thank you. Well, I'll just tell you, the reason I am, and I know y'all didn't come to church, but the reason I am the way that I am is because I believe in Jesus and he changed me. And I believe when he says it's better to give than receive. So, otherwise I would be selfish and rude just like everybody else. He changed my heart. All right, put in the link in there again. I'll put our phone number in there too. Um, you can text that line as well. And then I'm going to drop one more link to the Bayou Academy, which is our community that you guys are the first people that are hearing about it. But other than that, guys, it's been a blast. I appreciate everybody. Like, it's so awesome when everybody sticks around. This is the beginning, right? So this is just the beginning. Whether you reached out or not, hopefully we get to stay in contact and I can help you. I would love to help you purchase your first home. That would be an honor for me. So I appreciate all of you. I'm going to go home to my children and I'll be talking to a lot of you soon.